With a LLC, an LLC is a state level formation. So whatever state you're in, you go to, in Arizona, it's the Corporation Commission. In other states, it's going to be called different things. So you go to the Corporation Commission and you set an LLC. You set up an LLC. So an LLC is really for protection against some legal liabilities. So I always recommend when you are setting up a business, no matter what the structure, just have a chat with an attorney. They can speak better to what type of liability protection an LLC will give you. And that, again, is most likely going to depend on what state that you're forming your business in. For tax purposes, as a single person setting up an LLC, a single member LLC is what that's called, that has the same exact tax structure as a sole proprietorship. So a single member LLC, net income and expense is going to land on a Schedule C on your personal tax return and be subject to those self-employment taxes as well as your federal and potentially state income tax. And the same goes with a married couple. With a married couple, you can actually make the decision if you want to be considered a single member LLC with the joint filing couple being that single member, or you can decide to form a partnership LLC, and your net income and expenses on the business are subject to what they call self-employment tax. So when you work at a company and get a W-2 for your wages, you have withheld from your paycheck. You've got your federal income tax, your state income tax, which if you live in a state that does have income tax, you also have your Social Security and Medicare tax. So again, that's going to land directly on your personal tax return and be subject to those self-employment taxes. So I'll talk about partnership next, because we kind of touched on it here, talking about a single member LLC. If you are a partnership, whether a married couple who chooses to file as a partnership, or two unrelated parties coming together to form a partnership LLC. So you can have a partnership LLC that has its own separate tax return, which is called an information-only return. There is generally no tax liability on a partnership in and of itself. You have your income and your expenses on that partnership return, and whatever your partnership percentage is, if it's 50-50, if it's 60-40, if you've got a few partners in there and it's 25% each, for example, that net income then gets divided out based on your ownership percentage and flows onto your personal tax return.